Here we are, ladies and gentlemen. We are here to kick off Wednesday, February 11. We had quite a few earnings lately. We had ON Semiconductor report on Monday. We had AMKR report on Monday after ours, two very big positions in my portfolio. Did a couple moves in my portfolio. Apologize for not being on Stocks and Spaces yesterday to kind of explain that thoroughly. But here I am today to discuss that publicly. And we had some news that Bill Ackman has bought Meta. I don't know. Did you guys see that Bill Ackman basically owns the Mag 7 in Pershing Square? What is that, about $18.9 billion AUM and 220 to own the Mag 7. But I'm sure he's going to outperform as long as the market stays bullish. But we did see that he sold out of Nike. That one actually was kind of surprising. I didn't think he was going to sell out of Nike, but he sure did. Ooh, something just hit the markets right now. Let's go ahead and take a look at the stock market real quick. See where we are today. Pretty volatile day. I'm not gonna lie. This is the daily chart for the Qs. Arguably, we need to stay above this 100-day moving average. We closed below it yesterday. Not looking good right now. I mean, we're kind of picking up some steam a second ago. Okay, look, we're back with 100-day moving average. SPY is just continuing to stay bullish. I mean, this is definitely not an all-out everything go up market. This is a broad-based rally that we're seeing here. The RSP is up 23 basis points today. Again, another all-time high on the RSP. Why am I still getting these ads, man? I pay TradingView $20 a month to not get ads, and I'm getting some ads. What's the deal, man? What is the deal? Shout out to my homie, Stock Sniper out there. He is killing it. Wolf Defense is the account under the Wolf account, but Wolf Defense, he's running that one. That is a very good and knowledgeable account to actually be following, in my opinion. Stock Sniper, of course, is the gentleman that covers a lot of the numbers for the earnings. He's usually in Stocks and Spaces. I've known that guy for a couple of years now, and he's just killing it. He's like one of the cool people on Twitter that I really do like talking to. Very knowledgeable, of course, in the defense for a lot of investments in the stock market. Lockheed Martin, Kratos, a lot of those names. And they still have some upward moves, in my opinion, mostly because you have governmental funding, and you're about to see more printing starting to happen through means of the U.S. government, while the Fed just sits around and just monetizes all of that or funds it. So that is generally what we're seeing in the stock market today. Very volatile, but NASDAQ was below the 9 EMA today, below the 21 EMA, below the 20-day moving average, and it just recovered everything. So the market does not want to go down. And you know what also doesn't seem to want to go down that badly today? It's Meta. This thing got a pretty nasty drawdown earlier today and had a nice reversal, which is very good to see. Amazon is just not having a good year so far. I mean, this thing is down. What is this thing year to date, man? Jeez, this is brutal. Wow, minus 11% year to date. I would really hate for someone to I feel bad for people who have Amazon as a large portion of portfolio, which has been sitting on dead money for quite some time. Like your boy right here, he has been long Amazon for quite some time, and I don't know, it is what it is. Best company in the world, in my opinion. I don't think there is another company in the world that matches close to what Amazon is going to be in the future. But today the market is right on Amazon because the market is always right. And today the market says Amazon is not the best company in the world because you have basically all of the market cap for the S&P 500. Hold on, stock market caps. I just want to bring up this chart real quick to just see where we stand in the stock market as far as company size. Right here is that big, beautiful chart. That is not the chart. That is an ad. All right, so here we go. So NVIDIA is back at $192. It's $4.66 billion in market cap. We have Apple behind that at $4 trillion. $4.7 trillion for NVIDIA, about $4.1 trillion for Apple. Google is pulling back a little bit today, down 2%, which is pretty big considerably for a market cap like Google. $3.7 trillion. Microsoft is $3 trillion. Amazon is $2.2 trillion. TSM is, you would have ever thought that TSM is going to be sliding into the $2 trillion cup. That's insane. TSM, Wow. What does that tell you about supply chain? Supply chain is bullish. And I'm going to get a little bit into the two stocks that I bought, ACLS as well as Silicon Motion, ACLS and Silicon Motion, part of the memory supply chain. I'll get a little more into that and the reason why it's probably up today, in my opinion. Meta is at $1.7 trillion. Saudi Aramco is at $1.65 trillion. Broadcom it's at $1.6 trillion. That was close to $2 trillion before the earnings happened. Tesla 1.6, Berkshire Hathaway at 1.1, and Walmart is in the $1 trillion club. Oh, it looks like Eli Lilly got kicked out of the $1 trillion club recently. No worries though. I'm pretty sure Warren Buffett's going to have the last laugh out of all of us. He usually does. He always comes out on top. I mean, you can't really knock the guy for having nearly 20% annualized return on the S&P 500, beating the S&P 500 over the course of what, like 7 years? Like, guys, that's crazy. Like you guys can knock on Warren Buffett all you want. You could say, oh, he didn't buy, now he's buying Google, or now he's doing this, now he's doing this. Like, well, I mean, have you been around for 7 years and have a 20% CAGR? I don't think anyone can really attest to that. Stanley Druckenmiller is around like 20% CAGR, I believe, and he's been trading since the 90s. So we've had like two massive drawdowns since we had the dot-com bubble, which was like 70% off the NASDAQ. We had 2008, which was like 70% of the S&P 500. And Stanley Druckenmiller came out on top 20% CAGR. Like, you can't really argue with those results, right? That's GOAT status. That's GOAT status. And yeah, Nancy Pelosi's outperforming recently, but let's be honest, we have a bear market. There's gonna be a lot of these people who are going to be underperforming late stock market. So what is going on, everyone? Fred Phillips, how are you? Alfie, how are you? Sushi. I'm kind of craving some sushi now that I read that name. How are you doing? Dave, how are you, sir? Alfie again there. Say your piece. Was researching ACLS last week. You buying got me more interested. Did you also consider? I didn't look at that one. I picked ACLS for a specific reason. Probably a multitude of things. But there are a few reasons why I picked it up. Actually, let me look at this stock, Vico, real quick. Oh, pretty nice setup, actually. That's up 3%. I wonder if that has to do with ion plants again. I'll talk about that one a little bit. All right, Sushi, how are you doing? Raven, what's going on? Spicy, am I still holding hood? Of course I'm still holding hood. I think I'm not holding, I'm bag holding hood, but it's all good. It's all good. It's all in fun game. Trent, how are you? All right. Yeah, Druck is definitely the GOAT. So very interesting day in the market today, like I just mentioned earlier. What do I think of the direction of the stock market, where it's going to be going in the near term? I mean, that's very difficult to say. I mean, we've literally been chopping for like the last 4 months when it comes to the Qs. S&P 500 is trading decently higher, but I would say really since October 10, which is when you had that major meltdown, we've been in this range on the Qs, right? So let me just draw a channel right here. Where's my channel? No, is this one? I guess I'll use this one. Yeah, we've really been like here. Let me make that a little bit of a color. Let me fade this guy a little bit. Yeah, so we've really been in here in the Qs since October. Oh, that was actually October 10 was over here, but arguably that really doesn't make a difference because since here, we've basically been trading in chop, right? So we dropped here in October 10, we went up, we came down in November, we came up, we came down, we went up, rejected the previous all-time high, came down, we bounced back up. Like, this is like honestly a whipsaw of a market right now. And I think it's pretty clear of what is working right now in the stock market. And it certainly is not software, because you have software still major drawdown here. Software is dead again, apparently. According to the chart today, you have a lot of software stocks that are in major drawdown here. You have Adobe at 258. I sold this right here. Thankfully, I thought I was screwed over here, but it rejected the 9 exponential moving average on the daily and is back down here. So I'm sitting out of that one still, not planning to buy back in. A few of the OGs, I've been long GitLab, but I sold it around $47 right when we broke the 50-day moving average. I should have sold it earlier, but can't really catch them all. We do have a few other software names that are doing pretty decent. I mean, this isn't necessarily software, DigitalOcean. This is more on the infrastructure end, but more of the smaller Cloudflare. Cloudflare reported earnings yesterday, did pretty good, but this is a pretty nasty candle that we see here printing for Cloudflare after explosive earnings back below the 200-day moving average. That's not really looking like a great setup. Shopify reported earnings this morning, and guys, like, this is insane, but these moving averages do matter. I mean, this is a massive rejection. The 200-day moving average open up right into it. Massive rejection. I wonder if anyone here bought puts in that. That would have been a crazy turnout if you bought puts. But yeah, software, fintech is getting murdered. I mean, you guys already know Robinhood. Robinhood, in my opinion, I think looks like it's kind of bottoming here, but I'm not going to try to catch falling knives in this. I am a bag holder of Robinhood, so not looking to sell this position. I'm going to continue holding on to it. I mean, it's already half the size it was when it was like around 10% of the portfolio. Now it's back down to like 5% portfolio, but I'm going to let that one run. I did trim a little bit when it was in the 150s. So I don't know if it's 5%, maybe it's 3%. I don't know. I don't really, what I really try to pay attention to and size up are more of like the semiconductor supply chain stuff. So if we look at semiconductors over here, even on the SOX ETF, you could see that SOX is up 3% today, which is definitely nothing to ignore. NVIDIA is near all-time highs, but arguably still in a range. But look over here, back in October 10, it's still in that same range, right? So we're range bound, looks like on NVIDIA. Microsoft, the software king of AI, is basically back almost below $400. Bill Ackman did buy some Meta today, but I don't see how that's a bull case for it, right? Like, just because he's buying it doesn't mean that like it's going to go up. It just means that he's bullish it, which is great to see, right? $19 billion. When you're talking about $19 billion of AUM, you can't go out there and buy a ACLS or a Silicon Motion. Like, you have to buy mega caps because of how much liquidity you're throwing at the stock. You don't want it to move. Also, you need, like I said, you need something that's liquid so you can get out when you want to. And to be honest, like, he can't buy like a $10 billion market cap. He's going to be the entire float. I mean, he wouldn't go all in mid cap companies, but like at the same time, like, he can't buy these stocks. He has to stick in mega caps. That's usually what happens when you get that big, when you manage that much money. So bullish for Meta. I mean, it's rejecting the 100-day moving average here. This is definitely not looking good for Meta. I'm very surprised it retraced all of its earnings and filled the gap in. And I thought that would have been it, but it's still trading below where it was after it reported those explosive earnings. That's the reason why Enphase and Bloom Energy would go up as well. Alternative. Yeah, I know. See, so they're on semiconductor reported earnings on Monday. And guys, the stock was down like 7% after earnings. And you guys are probably watching me on Amit's live stream. I didn't really look into it after it went down, and I thought maybe the margins compressed, but then they post their non-GAAP margins as well as their GAAP margins, and I got a little confused because what was estimated were actually the non-GAAP margin. I was looking at the GAAP margin. So yeah, when you compare GAAP to non-GAAP or general accounting principles, non-GAAP takes out certain costs that would normally be included in the GAAP, right? So the non-GAAP actually beat the estimates, which is good. So I think maybe that sell-off that we saw where it was like 7, 8, 10% down after the earnings, after the print, it recovered everything back the next day. And then look where it is now. It's sitting at not 52-week high, not all-time highs, but near 52-week highs. And guys, I have to say, I don't think it's terribly undervalued anymore, but it's certainly not overvalued comparing to some of the valuations, some crazy semiconductor companies. I mean, look at Astera Labs. Like, this is an insane chart. This is bearish. This is a very bearish chart. And arguably, I used to own Astera Labs. I bought it when it was like $60 in April, and I was buying it all the way down from $140, small size when it was at $140 previously. Back here, I added like a couple of shares, and then at $100, I added more shares, and then I added more and more and more, and I bought a whole tranche down here back in April. and I rode this thing all the way up, and I basically started unloading the entire position above $200. Now, the valuation got a little insane for a non-profitable semiconductor company that produces retimers as well as networking capabilities. It's very strong in the inference field, but this is not a profitable company. Yeah, they're growing at 100% year over year, but guys, I mean, the market is just punishing companies that are not profitable, especially that don't have profitability or inflection on the horizon. Astera Labs is not even close. When this thing was above $200, that was the time to get out. Like, this is not a Micron where they're profitable, where they're continuing to become cheaper after every single earnings. This is not a SanDisk. This is a very speculative stock. So if you're in this one, you need to have a long-term time horizon, but I am not planning on getting back in this one. That was pretty insane that they sold off those earnings like that, but it's understandable how expensive the thing got. Arrested Network, this one's probably a bit more attractive than Astera Labs. I mean, this company kind of does the same thing and focuses more on equipment. This is also similar to AVGO when it comes to their networking hardware. This has a lot to do with the inference theme, right? So inference is very important when it comes to using AI agents because you're constantly querying all the servers that these companies, that LLMs host, and you need to have fast throughput, and that's what these companies do, and that's the reason why they're all gaining from it, right? So that's the reason why you're not seeing Broadcom below $300, because look, they do have that open AI exposure, but they still do have a lot of leg in other industries that are doing really well in the stock market. So now if you think of inference, there's a lot of things that come in there, but one of the more important things is memory. And this is the reason why Micron is still trading all the way up here, in addition to SanDisk trading all the way up here, right? So two companies that I got into were ACLS as well as Silicon Motion. I don't want to do massive deep dives on this one, but ACLS for the most part builds ion plantation machinery that's used. Let me actually share this one, and I will bring up their previous earnings slide. They actually report earnings next week. So pretty risky to be sized into this position. Oh, actually, hold on a second. Oh, yeah, that's a reason why it's up. Yeah. So that's why you asked me about Vico, is because they're actually merging with ACLS. I was like, why does that ticker sound familiar? And then now I just realized I'm used to seeing VEECO, but they're going to be merging soon, and that's supposed to be closed out, which is actually be very bullish for both companies. And you can see that both of them are actually up today. Let me bring up the earnings presentation over here for ACLS. All right, so, whoops, wrong one. Oh, wow, just had a massive amount of people join. Welcome to the stream, guys. Welcome to the stream. All right, so we have here ACLS. One thing that really attracted me to this company is, one, it's a mid cap. So when I got into ON Semiconductor, that was like an $18 billion stock. So it was even a large cap in that sense. The reason why there's so much alpha in mid caps is because, one, they're usually not really something that a lot of fund managers get into very big, mostly because the market cap is too small, but also they become overlooked of Wall Street. Stock Talk has mentioned a few times, this is the reason why he lives in the mid caps, because they're mostly undiscovered, but there's a lot of room for them to grow, right? Especially when you think about the semiconductor supply chain and semiconductors, where you have a multi-trillion-dollar market that's going to be ramping up going to 2030. So these smaller players that are very favorable vendors for these larger companies, which in this case for ACLS, their clients are Samsung. Major clients of them are Samsung and TSN. They mostly cater to fabricators, not so much to fabless companies. But what ACLS does is that they're able to build this machinery for these giant memory companies. They specifically cater to companies that are fabricating DRAM. Right? So dynamic RAM or dynamic memory, which is where Micron, Samsung, and SK Hynix fall in. And clearly you're seeing Micron up like 10% today, right? The theme is continuing, right? These companies are ramping up on how much memory they're going to be producing in the DRAM sector for memory. So who provides the machinery for these companies? One of them is ACLS, and they're partnered with very popular companies. Now, they don't actually disclose that they're partnered with Micron specifically, mostly because Micron doesn't necessarily build their own chips. They're more of a fabless company. They do own the rights and the patents to actually design their chips, which is the reason why they benefit off of it. And they are pumping out more supply out there. But the real beneficiaries of this are, of course, going to be Micron and SanDisk, but more importantly, the people who are building their products. And there is a massive acceleration in supply chain and how much they're supposed to be pumping out there. Micron has said it in the earnings call that demand is outstripping supply. They need to produce more of these chips in order to keep up with the demand. Means that they're going to be producing more of these chips, means that they're going to need more machinery and more reliable machinery that's definitely better, that's has no issues as far as producing DOA chips or dead and arrival chips and so on. And ACLS is one of the beneficiaries of it because they do play in this DRAM field. And one thing that really interested me about this company is their ion implants, right? So there's two different companies that are major suppliers for these ion implant machines, right? There is ACLS, like I just mentioned, and there's also Applied Materials. Applied Materials is one that a lot of people are familiar with. There's the Fab 5 that Chipstock talks about a lot, which is basically your Applied Materials. You have your LCRX or Lam Research. You have ASML, which is one a lot of people know about, lithography equipment. You also have KLAC, or I forget exactly what KLAC stands for, but they're also equipment and manufacturing. Actually, no, I think it's a Fab 4. And AMAT is one of them, like I just mentioned. AMAT produces these ion implants, but look at, am I sharing the right one? Yeah, okay. I'm sharing this one now. Look at the valuation on AMAT. It trades at 10 times price of sales. It's a PE non-GAAP. Actually, let me just look at GAAP. PE TTM of 38, 35 forward. Okay, this is not a cheap stock anymore. This was a cheap stock when it was half the price not too long ago, but this is not a cheap stock. The company's going a 4% year. Its margins are pretty decent, but that's a reason why they're trading pretty richly, is because their margins are really good. So really, where is the alpha in owning a stock like this? Well, it already ran. Wall Street knows about it. It's a $261 billion market cap. So who are its competitors in this industry? ACLS is a major competitor to AMAT. Now, again, I'm not going to go too deep into this, but let's look at the valuation for ACLS. On a forward PE, they're trading 25, but they're going to be reporting earnings next week, so it's likely going to be re-rated to be cheaper than this as it releases earnings. The PE trailing is a 20, so already more attractive than ACLS as far as valuation. Sorry, than AMAT as far as valuation goes. EV to sales is less than 3. Okay, so it's not terribly expensive. I mean, preferably 1, but it's not terribly expensive. Price to sales is 3. Okay, and ratio is let's see. Oh, you know what? It's not here actually. I have to crunch that number. I did have it on my notes, but I can't really pull that up right now. Growth is minus 20%, but of course they're going to reaccelerate, and that's something you're probably going to see next quarter. And I think Wall Street is already sniffing this one out. Profitability, 45% margins. EBIT margins are 16%, which is to see. So very high, for pretty good margins for a company that's only about $3 billion. Yeah, $2.73 billion. What's also very attractive about this one is the chart. Let me go ahead and share the chart for you guys over here. The chart is very attractive. So there are a few things on here that look really good to me in this chart. One, now today it's trading above all the moving averages, which is bullish. All right. Trading above the 200-day moving average. On the weekly chart, not as great, but it is trading above all the moving averages on the weekly chart. Still below the 200-day moving average. I believe it's probably going to open up above this after earnings, or it's going to come closer after earnings. I'm very bullish on earnings coming up, but do your own due diligence. This isn't financial advice, obviously. On the monthly chart, it's doing pretty good. It's only trading below the 50 on the monthly, right? So this is a very bullish setup for this chart. The chart looks bullish to me, and I like these setups. This is a very similar setup to On Semiconductor, because it's inflecting above these moving averages, and the moving averages, like Stock Talk says, they're not spread out, right? It's not super extended off of the moving averages. In fact, it looks like it's about to come above and break out of these moving averages as long as the market stays bullish in this entire sector. So let's compare this to On Semiconductor. Very extended, okay? I'm not selling though, but very extended. The company's not nearly as cheap as it was before. It's basically doubled since I bought it. This was the setup I had when I bought into On Semiconductor. Same thing. All of the moving averages. I have to give credit to Stock Talk, because he taught me a lot of what I'm applying to my methods today. Like, it's good to have a little bit of direction in terms of how you should perceive your holdings and how you should find alpha in the stock market. But it's more important on understanding how to apply it. Because if you apply it correctly, you don't need to copy people's trades. You can understand these businesses, understand where it is in the secular themes, and able to have the conviction to hold these in case you have drawdown, right? But this is a similar setup over here. Broke above all the moving averages after they're compressed for a long time. And look, the stock has just been going straight up since then, right? I don't know where it's going to go after today. This is very extended. Look at the setup with AMKR, right? Stock talk got into this when it was in the $20 range. Everything was compressed over here. Okay. And look, it's just been using the 9 EMA and the 20-day, the 50-day support since then. And it just continues to go up. This is actually not as extended, but certainly not as cheap as it was when I'd gotten it as well. So when Stock Talk called this one out, I've been following. I talk to him on Stocks and Spaces with you guys. Like, you guys hear those all the time. I talk to him a lot in those Stocks and Spaces all the time. Very sound person and very great advice as far as like positions that he's done in. He had one with Amit earlier today as far as Spaces earnings edge. And yeah, I mean, it's a very great company. And guys, I got in around $30. And then before the earnings, it went, I think it was this earnings right here. Yeah, before the earnings, it went to like 33, 34, 35, $36 or something like that. I don't know. This is weird. I remember it being around $36. And the thing dropped down. And I guarantee you, people who did not have a conviction for this company probably sold out at the bottom after earnings. But if you did research on the company, you looked at the charts, when it dropped to $30, the chart was still bullish, right? And look where it's like nearly double than where it was after the earnings. Like, this is why I say so many times, guys, have the conviction in your companies that you own, whether or not you follow someone into something or not. You need to have the conviction, because when it inevitably pulls back, that conviction is going to help you stay in it, right? Hood, there were a lot of people chasing this when it was above $100, and look where it is today, right? This is a terrible chart. There's nothing good. You cannot tell me this chart is bullish. This is a bearish chart. Even on the weekly, this is a bad chart. Falling off a cliff. Monthly, not so bad. It did bounce off the 20 monthly, which is good to see. But guys, the time to buy Hood was when it was down here in the 40s. Even after April was the time to buy Hood. If you're buying it here, okay, but then you're hoping for the best. You're hoping it bounces or whatever. But like, it's a falling cliff, right? I'm not adding more to it. I am bag only position, but I'm fine holding on to it, because as the rest of the portfolio grows, this position will get smaller, and I'll be a happy shareholder years and years from now. And it won't really move the portfolio crazy, but it'll be something that I'm going to own for a long time. Is he on Twitter? Yeah, he's on Twitter. Let me actually pull up his X account real quick. This is his Twitter. I'll put it over here. Yeah, I wanted to have him on here, but then he already went in Amit's Spaces, so it's like, I'll get him next time. But I'll have him on here at some point. The guy's spitting alpha, so I don't want to take that time away from him. But the one thing he was talking about today was Sina. I have a position in Sina. Not a major size position, but I do have a position in Sina. Chart looks bullish. It does go along with the themes as well. I'm not going to take credit for that one. He's the one who called that one out. Yeah, so ACLS, bullish setup for the chart. Silicon Motion, also a memory player, but they build more the controllers between the NAND chips. So you have DRAM, you have NAND. NAND is more of the storage. NAND is more of the flash memory and storage for a lot of the computations that happen with a lot of these semiconductors, where they basically are doing all of LLM processing, and they got to store that. They got to store that on not hard drives, but flash memory. The reason why they use flash memory is because flash memory is a lot faster for inference than hard drives or magnetic disk drives, right? So magnetic drives is like something we all probably have in our computer, not solid state, but more of something we've probably been using for the last like 30 years. And it's much slower as far as its write speeds. Its read speeds are decent, but you're not going to be as fast as flash memory. And flash memory is very expensive. But when you build these flash memory drives. You're talking about companies like SanDisk, they build them, Western Digital builds them, Pure Storage builds them, and they attach them to the servers. And those drives need to communicate with the CPUs as well as the motherboard and so on. And the controller, which is basically the chip that sits between those memory drives as well as the server, is what speeds up the throughput between both of those server components. And Silicon Motion is a major producer in both in that, right? So you can't have one without the other. It's all the semiconductor supply chain. You have multiple components, you have multiple products, machinery, services, factories, all that, and they're all going to benefit. But the ones that are going to benefit the most are the ones that are undiscovered, the one that are going to have the inflection point. Obviously, you're going to have like these $100 billion companies that are going to benefit a lot. But when you're talking about acceleration of revenue, when you're talking about expansion of profitability or margins, and when you're talking about going from like mid cap to large cap, adding $3, $4, $5 billion market cap as this entire semiconductor industry continues to ramp up, the most alpha is going to come for these mid cap stocks. And I'm starting to see that. I'm starting to shift away from a lot of, and I don't want to give it a bad hype, but a lot of the retail holdings and shifting more into these themes that are actually working right now. I sold IREN yesterday. All right. My average is like 28, 30 bucks. I sold at $45 yesterday. All right. One day later, IREN is down. ACLS is up. SIMO is down. SIMO is up. And Lemonade, which I also sold, is down. That doesn't make me a genius. Okay. We're talking about the long term here, but it is nice to see, you know, pat in the back. It is nice to see. Oh, what's going on, Evan Dog? How you doing, man? Oh, you gave the stream a like. Thank you very much, sir. What's up, chat? How many positions do I have now? I got to put everything together, but I think I'm looking at about 14 to 15 positions. There's a few positions that I do want to probably cut off, but I have to really think about it as far as a portfolio. IREN, yeah, it was about 1.5 to 2% portfolio. It was a 3% position when it was at 60 bucks. So it wasn't really that big of a loss for me. Actually, it was a gain still, but like I wasn't, unless like IREN went up like 5 times, it wasn't going to move the portfolio, right? And then when I went into SIMO and when I went to Silicon Motion and ACLS yesterday, I also bought calls on the position as well. So it will be much more profound how much my portfolio would appreciate from these positions going up versus like an IREN or something, right? So, you know, I gotta be honest. I used to own Toast, and it's been very clear that fintech is not doing good right now, and Toast is part of fintech. So is Klarna as well. So is Affirm. And probably the reason why is because credit is getting hit, right? So if you think of these companies that rule on credit, especially since Trump basically announced a 10% cap on interest rates for credit cards for 12 months, a lot of these fintech companies have been hit because they make money off of that spread between how much they pay out as far as deposit goes for people that deposit money to their companies and how much that they collect as far as loans go, because credit cards are ultimately loans, but in a much shorter time frame. So the reason why that these companies down, even though Toast isn't a bank or anything like that, you know, all these financial companies impact one another. As far as the going theme here is that the entire sector moves in unison. Like if one, like actually, let me pull up the big chart here or the big table. The reason why I break up my trading view into specific sectors is because I can understand like why an entire sector is going down. Like for example, SaaS, all of SaaS is doing crummy today. It's not just Klaviyo, GitLab, or Datadog. It's all of them, right? So it's probably not a company specific problem when you see this happening. All right. Cybersecurity, it's all flat. It's kind of going down, right? So it's not a cybersecurity problem. It's not a company specific problem. It's a cybersecurity problem. Software still. Fintech, right across the board. Okay. This is not a Klarna problem. Maybe there is a Klarna problem actually that I don't know about. This isn't but I would say that most of this is not a problem with the company. It's a sector-wide problem, but I think this problem is starting to spread everywhere, right? Or it's starting to become apparent that they're all getting hit for a reason, right? Even C Limited, I didn't think it'd be trading down here. This is probably a decent looking chart, but you need to get above that 20-day moving average there. Shift 4, right? So this is all Shift 4 specializes mostly in hospitality and restaurants. Toast specializes mostly in restaurants. They don't really do much hospitality, but they're a bit different because they actually provide the hardware, kind of like Shift 4 does. And Toast is they're expanding in Australia. I'm bullish Toast, but I am not bullish the stock, man. Like, this is a bad chart. This is a terrible chart. I don't like to buy these things. That's the reason why I added to ACLS and SIMO or started them, because those charts are bullish. I'd rather buy charts that are bullish than charts that are bearish. ServiceNow was below $100 this morning, right? And I've said it before, like I sold it up here. And I'm not like here to be like, I'm so glad. I'm just saying, like, what I was thinking at the time was that, like, look, it needs a lot of work to get above this 50-day EMA, right? And it's already below all these moving averages. So it can easily reject it. And then this happens, right? So, and why didn't I add it here? I was on this stream actually last time over here and was like, I'm not going to add to it. And I even said I wasn't going to add to it after the earnings either over here. Look where it is. It's lower because that companies that or stocks that are doing bad on the chart in this market today, this is not an all-out dip buying stock market where you buy dips on all stocks when they pull back. This is a stock picker's market right now. And it does not have any remorse or any sympathy for stocks that look bearish in charts. I mean, look at Paycom. Like, this is mostly in small business, mid-sized businesses as far as their clients goes. That's not doing good today, but that is in the software bucket. Yeah, it all got hit, man. It all got hit. So, you know, things that are looking good right now, it's semiconductors, guys. It is semiconductors and it is energy, but even energy isn't doing the best today. Well, energy is doing good today, but only when you come to your profitable energy companies, not pre-revenue companies that sign contracts with mega caps but won't even see revenue for another 3 years. They're not doing good today. But CCJ, Chemico, they already have a good financial book. Okay. Constellation Energy, they are profitable and they already have a lot of business today. Next decade, they don't have any revenue today, but they are building the trains in South Texas, and they will. But this is going to take a lot longer for the story to play out. VG is a #1 nat gas exporter in the U.S. This is obviously going to benefit as long as those nat gas prices come down. But natural gas is probably the quickest form of energy you can get on AI right now, or AI data centers. And there is an energy bottleneck. There really is. There really is, man. So, yeah, semiconductors, specifically in memory, specifically in fabrication sectors, and things that are actually profitable. And that's why Navitas is not really getting any love here, and things with no OpenAI exposure. So, yeah. Oh, see, I knew that was a fake out. I knew that was a fake out. I should add Bloom or TE to the list. Those are RJC stocks, man. That guy is funny. Shout out to RJC, man. That guy is funny. BE, yeah, I mean, the chart's not bad. I don't think it's a cheap stock anymore, though. That's a $43 billion company, and it's certainly not extremely profitable or anything. So let's see here. BE, dude, they are not. Yeah, they're like on the brink of profitability, but they are expensive. They're trading at a 20 times EV to sales, 17, 18 price to sales. No, I'm good. I'm not going to buy that one. Let's look at the other one, FLNC. I haven't really looked into this one, Fluence Energy. Okay, they're down there, $3 billion. Okay. Valuation, there is no valuation. Trading at 1 times price to sales. Is this pre-revenue? 1% growth, 11% gross margins. Not profitable. I don't know. I'm very careful with that stuff right now. TE, this is a popular Twitter one. This is, I don't know. Like when they gain like so much popularity, it's very tough to find myself in that. I've been trying to steer away from the massive following, mostly because they're not undiscovered anymore. They are already discovered, and TE is not profitable. And they trade 4 times price to sales on a forward basis, 3 times price to sales. No, these metrics are wrong. I haven't looked into them. I don't know. I think whatever is working is going to stay working. That's my opinion. Let's see end phase over here. Okay, not bad. Not bad. Solar is probably coming back, in my opinion. I think solar is coming back. EE. Let's see here. Oh, wow. Might need to look into that one. That's their valuation. Okay. 30 times, not bad. 3 times price to sales. No, price to sales is 1 times. EV to sales. You know what? They probably have a lot of debt. Yeah, they got $1.6 billion in debt. What's the market cap of this company? Okay, so 1/3 of their market cap's in debt. That's kind of scary. I don't know if I want to invest in that. Let me go back to FLNC. I didn't even look at their debt profile. Their debt is $4 million, $400 million. They have 450 in cash. So they are cash positive, net cash positive. $3.5 billion market cap. That is an interesting one though. But I didn't like their profitability profile, and they have very low gross margins. I don't know. Maybe this is what Seeking Alpha is telling me, so I don't know if that's exactly true. And then is TE Talent Energy? No, TE is T1 Energy. They have $700 million in debt, and their market cap is $2 billion. So almost 1/2 of their market cap's in debt. No, I'm good. Yeah, just a quick powwow on that one. But I'm still, to be honest, I would like to size up some of the existing positions that I have. This is most of my portfolio holdings right here. There might be exception of a few things. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 15 positions. I want to size up ACLS, but we'll see what happens at their earnings. The chart is setting up pretty nice for earnings. I mean, it could definitely gap down. You know, no one is immune to anything. It can definitely gap down, but they would really have to shit the bed in order to really do bad in earnings. Anything can happen though. Earnings are something else with the market. You can't really determine where the price is going to go, but fundamentally things could be sound. Yeah, that net chart is not looking good. Where's the market sitting at right now? It's just chilling. I'm not buying Bitcoin. I'm good in Bitcoin, guys. I added a little bit to it, but like when I say buy it, when I'm saying like buy it, I mean like create like a big position in something, at least like 5%. Like, no, thank you. I'm not trying to buy that dip. Look at that, Meta's back almost 70. We'll see what happens with that one. Yep. So I think that really is about it. Again, not necessarily a massive deep dive in the companies that I bought into, but at the same time, we don't have enough time to do that right now. We're going to be cutting the stream out. I did want to go over some of the holdings in Bill Ackman saying, did he show up in CNBC today? Actually, let me go and check this out. God, there's more software fear. Crazy. Oh, interesting. Someone went on there talking about, oh yeah, the payrolls thing. Let me actually because I wanted to check out what CNBC is saying about the payrolls. Frank Santelli, what's his name? Frank. Let's see here.
Hi, good morning, Kelly. Yes, it's Jobs Wednesday. Not necessarily a Friday, but every bit as important. Non-farm payrolls for January coming in twice expectations at 130,000. 130K. That would be the juiciest going back to April of last year when it was 158. Now, if we look at a couple of months worth of revision, they came in at minus 17,000. Now, let's look for average hourly earnings month over month, up 0.4. That's 1/10 higher than both Looking back and looking forward, 4/10 would equal October last year. You are all the way back to the summer of 24 to find a higher month-over-month earnings number. Let's go year over year. 3.7 exactly as expected. 1/10 light to 3.8 in the rearview mirror. So how does that stack up? 3.7 would be the lightest since it was actually 3.6 Thanksgiving of last year. Now let's look at hours work, shall we? 34.3. That increase, that's a good thing. That's up 1/10 from both what we were expecting and our last look. 34.3 would equal November. To find a higher one, you're all the way back to March of 24. Now the unemployment rate may be the most important number of all, and it moves down 1/10, 4.3%. All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More good news, 62.5. That would be the best since it was 62.6 in April of last year. And drumroll please, the final number I'm going to give you is U6, the underemployment rate, and it comes in at 8%.
All right, so I got a little distracted here. I was looking at some charts. I'm starting to think it's time to hedge because that jobs report was good and the market just faded the whole move. It's never what you want to see. You did have some broadening out, which is good. SPY just turned red again. I'm starting to think it's time to hedge here. Now, I'm not going net short the stock market because I like my holdings the way they are right now. They're doing good in a day like today. And what's going on here? Move the drawings. If I'm going to target a hedge, I kind of want to short BMNR. This is a bad looking chart. Oh, why are you shorting at the bottom? It's like, well, you're supposed to short things when they're falling, not when they're rising up. It's not a game like that. I have Robinhood. If I do short BMNR, then I would technically neutralize my position with Hood by not selling Hood. Nebius reports this Friday and this tomorrow morning. I'm going to be streaming Nebius tomorrow morning with Nate Dogg or 3-Plate Nate. So look out for that one. I am not liking this price action heading into earnings for Nebius. Zeta reports next week. This is a bad looking chart right here. Yeah, kind of scary stuff when Zeta falls. This is the entire software narrative. And the problem with Zeta is that it is a retail frenzy stock, and I got caught up in it. And I just, this is like one thing. The last time I added this was 18.5. And I actually cut my leaps in it around there. Actually, no, I cut my leaps in Zeta around here when it could not stay above the 200-day moving average and save myself some pain. So it didn't really bring down the portfolio. I was up like, oh God, I was up like 37% year to date. And then now I'm still up a lot. I'm still up like 18% year to date. But Zeta definitely hurt the portfolio because I was pretty heavy in that position. So this is my year to date right now. And 17.3% year to date. And I got to tell you that, what's weighing down my portfolio? Zeta, Rubrik, Mercado Libre, especially Amazon. And it sucks because, these are not in favor right now. And this is the hard part, is that I'm bullish these companies, but like, dude, the market's just not agreeing with me on it. And it's very troublesome. And one thing that I've added myself is not being a bag holder. Now, Rubrik, Zeta, Grab, Amazon, the floor is pretty high in these stocks when I think of valuation. Zeta is a cheap stock. It is not an expensive stock by any means. The problem is the market's right. The market is right 100% of the time because whatever price you see is what the market dictates, and that is the valuation of that company at that given moment. The market is always right. Is the market going to be right long-term? Well, it'll adjust and it'll be right long-term. Like that's just like when the people say the market is wrong. Well, on paper, the market's not wrong. That's why they're pricing stock at that level. But the market will be right and you will be right. And the market will agree with you. The market will agree with you by bringing price higher. And that's how you find alpha in the market, because you make your thesis and then you set your price target or whatever you think the price should be, and the market brings it up there. So in a sense, the market's always right the whole time. It just agrees with you at a certain point. And Zeta, it just doesn't agree with me. It just does not like Zeta. It's pushing low of day here while the market is at 613 right now. I have hedged. I have bought puts in Zeta before. I have. And I've suffered less drawdown by owning puts on it and then selling it when it drops. But it's just, do I want to do that right now? I mean, we're really here at the 100-day moving average after we just recovered it. We could be back testing the 100-day moving average in the Qs. And technically speaking, the Qs are still bullish. I mean, we're still above the 21 EMA. And we're like well above the 50 EMA, the 50-day moving average, and so on. So the market's still bullish. If I were to short something, it'd have to be something where the premiums are not high. So something that already reported earnings or doesn't have earnings coming up where the premiums would get higher. BM&R poses a good, I mean, this is really dependent on crypto, and crypto just looks like garbage right now. Like Bitcoin looks like it's headed to 58,000. Ethereum is already below the 200-day moving average, and BM&R is going to move with that. And I've shorted BM&R before. I don't know. Maybe I'll sit on it for a minute, because like this is just like things are not working at all, but a lot of things are working, right? So like this market doesn't scream to me that it's bearish right now, but it's just. So this is a stock picker's market right now. Like it's truly crazy to be green year to date, because there's so much high beta that has pulled back, but there's so many things that are up a lot year to date. Even like Tesla, I believe, is green year to date. Hold on. You know what? Let me do the other chart. Yeah, I got my performance chart. Let me save this sucker. Save. All right. Let me bring up the performance chart. Percentage. Save. All right. So year to date, ServiceNow is 34%. Oh my goodness, man. The market is brutal. The Qs are down 1% year to date. IWM is up 7% year to date, guys. Like, it's so hard to be bearish to market right now. 1% year to date on the market. Alibaba is up 7% year to date. Tesla is down 6%. But it did start it pretty high. Amazon is down. Like this is weighing down portfolio, but I told myself I'll trim Amazon at some point, but I find it very difficult to trim right now. I'd rather outgrow the rest of the portfolio and make Amazon smaller that way versus trimming Amazon. Look, Micron is up 40% year to date. This is the reason why the memory stocks are up. 147 year to date in SanDisk. 20% year to date in Oracle. And now let's look at Iron is still 8% year to date, which is decent. But let's look at some crazy software stocks. 26% down year to date Adobe. Piece of crap AI is down year to date. CRM is down 30% year to date. Datadog, even after its rally, is down 8% year to date. GitLab is down 21% year to date. Oh wow, net pulled back after those crazy earnings. I can't believe Cloudflare is going to fade that entire earnings. Crazy. Workday is down 30% year to date. ServiceNow is down 34% year to date. MongoDB is down 40% year to date. Snowflake is down 20% year to date. Guys, these are just not, it is not the day to be in software right now. It's not. You can always buy software when it recovers. You don't need to buy right now. But I mean, hey, you guys want to bottom call stuff? Go ahead. I am not in favor of that game. Bitcoin is down 30% year to date. Ethereum is down 41% year to date. BM&R is down 30% year to date. Hood is down 33% year to date, and that hurts. Zeta is down 22% year to date. See, I'm not immune to any of this. Oh, Central Century is pulling back a little bit here. Yeah, there's a lot of retail-friendly names that are just pulling back here. Kraken Robotics, I know that's a very popular one. I looked into it. Shout out to the homie I was talking to during the Omits meetup about this one, but I'm going to say no to that one. Partnerships, whatever, but like I don't want to be in that one right now. Yeah, guys, I would say be careful what you get into. I have to really consider this this hedge theory right now because it is still above the 200-day moving average. Yep. So we'll see, guys. We'll see. All right. So I think that about wraps it for today's stream right now. Again, tomorrow morning, Nebius live. I'm going to hit up Free Plate Nate, ask him what time on it. Nebius reports very early. Let me take a look over here. If Nebius goes down, like that is just going to be brutal for me. I do own Nebius. That's why it wasn't big a deal me cutting, for me to cut, what's the name of that company? IREN, because I do have Nebius, so it's okay. February 12th, tomorrow, reports soon to be published. Does it say what time? Let me look at the chart, see what time they reported very early when I streamed last time. Let's see here. They reported on November 11. So let me go to 10-minute chart. Let me go to November 11. Brother, that's the Qs. All right, November 11. All right. Yeah, they reported at 7 a.m. So that's 4 a.m. November 11. Pacific, 4 a.m. Pacific. And that would be it tomorrow. So I will be live probably at 3:45 a.m. tomorrow. I don't know why I'm doing that to myself, but I'm going to do it to myself, so it's all good. Ooh, Meta's having a nice recovery. Good job, Meta. Yeah. Oh, wow, look at that. Whew. Whew. Thank goodness. Maybe it's for sure going to dump. Man, honestly, I kind of want to set that expectation low. So if it goes down, okay, well, I kind of knew that was going to happen. If it goes up, okay, I'm pleasantly surprised, right? So I would love that. I would like to buy more Nebius, guys. It is a diversified business, very diversified. I've always liked it more than IREN anyway. But the cost basis is too low for me to add to it right now. Sorry, it's too low. Where's my stuff? Here it is. Nebius. Yeah, this is not a good entry into the earnings. This is a very bad. I would hedge it, but the premiums are just so high. And honestly, it would have to make a big move down in order to gain money off the premiums. So I don't think I'm going to hedge it. Maybe I'll look into selling some call credit spreads that are in the money. I usually like doing that one. They usually hedges pretty nicely when I do that one. Probably not going to. The market's looking pretty decent, recovering the 100-day moving average. It doesn't mean it can't gap down tomorrow. We'll see. I think Trump was supposed to have an announcement today after hours. So yeah, I know, dude. 4 a.m., but I'm going to be there. Pacific, 4 a.m. Pacific, 3:45 Pacific. Follow me on Twitter, because I will be providing the link and stuff for the earnings tomorrow. Of course, follow the YouTube for Wolf. That's where I'm going to be streaming the earnings, so you guys can check it out in there. I'm also going to do it for my channel as well. But yeah, let's see what happens. Let's see how much money we're going to lose tomorrow. It's like Jadakiss. So we'll see what happens tomorrow. Anyone else got any more questions? I'll stick around for another minute if anyone's got any more questions. I'm on the train. Yeah, a lot of people are on the train. The shortage is just paper for silver, on paper for silver. Yeah, it's true. Memory train keeps going. It's true. It's true. Yeah, memory does have, silver does have applicable properties for that metal. More copper, more for copper. Hey, you know what? I like your avatar. I love The Simpsons. No problem, buddy. No problem. Caroline, pleasure having you on here. Red, red, red. Yeah, it is. It is definitely red for Hood, especially. Oh, Hood is back at $78. So we will see. Dude, honestly, if you full ported Micron, you'd be up double digits this year. If you full ported SanDisk when it was scary, you'd be up 140% this year. Can you believe that? The one you least suspect. That's why that RJC dude is up so much, because that dude got in early. So shout out to RJC. Shout out to RJC. All right, guys, that is it for the stream. 6:45 a.m. tomorrow. That is 3:45 a.m. Pacific time. I will be there with 3Plate Nate, and whoever else wants to join, just send me a DM on